upside. Every single day, I'm looking at NAS, I'm looking at ES, and I'm looking at US30. Okay, I'm looking at all three to see which one has the best setup for that day. On this day, US30 had the best setup for this day, right? Today, on this day, what you can see here, and I'm gonna go down to the 15-minute time frame. What you can see here is on this day, we swept these lows, right? You can see we swept Asian lows right here. We swept Asian lows and we have a push towards the upside. Okay, so since I seen that we already took out Asian lows and we have a push to the upside, the next thing I'm gonna show you guys is the fair value gap. We have a fair value gap right here. This is a 30-minute fair value gap. 30-minute fair value gap right here. You can see the market comes down. This candle here is the open. So let me go down to the 5-minute time frame. This candle here is the open. So as soon as we came into this 30-minute fair value gap here, I was looking for another push towards the upside. I was looking for another gap towards the upside that was going to give me the entry on this trade. So I'm gonna let this market play out. What do you see? Look at this huge impulsive movement towards the upside, right? Keep letting this market play out. Boom. There goes the gap. There goes the gap, guys. There goes the gap right there. So we have 5-minute candle here, 5-minute candle here, and 5-minute candle. This here is the gap. Boom. That's your fair value gap right there. And now all I'm waiting for is rejections off of it. So as soon as the market rejects, right? And you can also see we have another fair value gap down here as well. And I'm gonna talk about that too, because that's important. So we have two fair value gaps here. We have a 5-minute here and we have a 5-minute here. As soon as the market rejected off this area, see we continue lower, we reject, we're rejecting, we're still rejecting, we go higher, boom, right here. As soon as we broke this high, I took my entry. Right there, right? My stop loss went underneath both gaps. So my stop loss went underneath this gap and that gap, ensuring that if the market really wanted to continue lower, we would have to invalidate both of these gaps. I was confident into taking this bullish trade towards the upside based on those confluences. And my target was above these highs right here for my 1 to 2, which is about right there. As I was in this trade, guys, you can see the market is kind of pushing towards the downside. I thought this was going to be a losing trade. I was ready to accept my loss for the day. But you guys know we need to follow our trading plan. We need to follow our rules. So once you have that stop loss set, you have your entry set, that's it. Do not touch the trade anymore. You've already put out the plan on the markets. Let the plan play out, right? Let the market do its thing. If the market's going to go higher, it's going to go higher. If it's going to go lower, it's going to go lower. So that's just basically the mindset that we were in on this day. And you can see the market is playing out. We came back, we mitigated those areas again, and now we are pushing higher. These highs right here was the closest area of liquidity that I wanted to see the market come into. And then of course, you see we have these highs up here as well. Look at that explosion, guys. Every trade that I've showed you guys so far, you can see how the market is exploding off of these mitigations of these imbalances.